explaining the gold, the motivation of this is educational, right? So um, the CPI data came out, okay? Bearish for gold. Gold has been rising for, I can't remember how many days in a row, non-stop, apart from this little blip here, for quite some time. Breaking out of last month's highs, hasn't really looked back. Normal market behavior, you'd expect a correction at some point. CPI data would be sort of the perfect storm for such a correction. So looking for a bearish daily close, targeting the origin of the breakout, the prior origin of the breakout, which came on the 5th of April. Okay. And the way that I was explaining that it could be played, and not to say that this is going to work out entirely, but it's an approach. Risk management is at the core of this strategy. So the um, the average true range of any given day over the last 21 days has been about $30. So we've already done around $30. So that's the high of the day. This is the low so far, and we've done over the average true range. So it would make sense, and I'll come to that in a moment. So let's stick with what's happened. So we got the CPI drop, and then there were queries as to why is gold rising. Well, it's very common for such an event to see volatility. So the price drops in accordance with the outcome of the data. Um, it's pulled back into the coil, which are the lows of London, the lows of the New York Open. So this coil here, below the closing price, but it's pulled back up towards there from where? It's pulled back from last week's highs, which I've highlighted here. Last week's highs. Pulled back from last week's highs. Last week's highs, so it broke out Monday from last week's highs. Pulled back from there, it's pumped back up into the origin of the drop, or the lows of New York, and it gave us an opportunity to sell the first bounce. So this is the bounce, and this here, this candle broke the line in the sand, which was the low. Was it that candle, or just bear with me? That's the low, really, isn't it? So this here for me was a sell. Now I was doing that just ahead of a new hour in anticipation that we've seen the high of the pullback, stop above the high in that case, in anticipation that a new hour would be a bearish hour and a bearish close. And that's simply it. And going in small, adding as I'm more convinced that my thesis is right, and therefore managing my risk, and that's simply it in a nutshell. So I've taken a large portion of the trade off, again, managing my risk, getting paid for my analysis, my time, and so forth, stress-free trading, reserving my mental capital, happy to take some profits. You don't get poor by taking a profit, but leaving on plenty so that if I'm correct, I'll do well. Now, I've taken the position to break even because we are below yesterday's lows, which are over here, yesterday's low. We're below last week's low. We're below the closing price. Everything is stacking up for lower lows. And targeting, like I said, the breakout of last week's highs. Now, that's a relatively tight stop, but as I said, below last week's highs, below yesterday's low. So, thesis is that really we should stay offered. Otherwise, I'll be unlucky and it'll come up, stop me out on a stop hunt, and then perhaps roll over later on in the day. Very typical of gold. A bit of a tricky instrument to trade, to be fair. Volatile. And also, given that we've already done the typical ATR of any given day, cautious that this can perhaps just slide up into consolidation. But I would argue the case for the market to close below the closing price and give us a bearish close for the day, a first red day, signal day for tomorrow and Friday, to continue to be looking for shorts, ultimately targeting, coming back to the daily chart, the order block, if you like, the breakout candle here that took out, that printed last week's high, and then Monday we continued higher. So essentially coming back into the rally, the origin of that rally is where I'm targeting. And if it doesn't happen today, it will be the same scenario for tomorrow and Friday. If it doesn't happen Thursday, then for Friday. But if this closes as a red day today, then I'm looking for shorts for the remainder of the week, the back end of the week, Wednesday, Thursday, Friday. So Monday, Tuesday, Wednesday, pumping up. Monday, Tuesday, Wednesday, potentially capitulating for the back end of the week to come lower.